In this video, we continue with part 2 of our highly popular series to introduce an effective and highly profitable trading strategy, scalping. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this lesson for the trading community, we teach in step-by-step detail with video of recorded entries and exits 3 scalp trades in ROKU and Baba to help you grow your trading account.
Last week we did a introduction to scalping video, and really what we were doing in that video, I was showing you guys charts, I was showing you guys the specific setups that I like to use in the high beta stocks. I was showing you how, trend following with EMAs, showing you how to take those momentum drives in price, and really how to execute the idea of scalping. The most important thing about the previous video was how, you really need to still have that context that can help you drive price. When you're developing a trade idea, you always want to make sure there's some wind at your back that'll help some real volume come into the stock and drive the price away from a key technical level, for example. So just to quickly review what we covered in that video, we established that a scalp is a short-term momentum trade with a very tight stop. We want to make these trades ideally around a key technical level, provides a clear movement of price when it's broken or held. This works best in the high volume periods of the day, first hour, last hour. This isn't really the kind of strategy that you want to get locked into in the middle of the day when there's not really any volume, nothing really driving price. We can scalp along a trend if we have a developed system for doing so. I mentioned in the last video some people use RSI, trend lines. I personally use exponential moving averages. We want to see volume in the direction of our scalp that acts as confirmation. We want this to happen quickly, and if it doesn't happen quickly, we get out of the position. Reading the tape is a vital skill in performing scalps, and in this video we're actually going to go through and look at some tape. So quickly to go over some of the tips, things that we're going to be looking for in the box. We're looking for acceleration at the speed at which the tape is changing bids and offers. We're looking for a flurry of prints in the time and sales window in the direction of our trade. We're looking for a rapid movement in price away from the area we're interested in, and then you could also make trades based off of large size at a technical level. There aren't going to be any examples of that in this video. Maybe we'll do that another time. Okay, so going off of that, these are going to be real trades that I took last week. I'm going to set up the charts first, show you how the trade worked out, how it's set up, and then we'll dive into the real-time tape. Okay, so the first trade, actually 2 of the trades are going to be in ROKU. The daily chart's going to set up the same way for both of them. In recent days, past month, 2 months, 3 months, this is the daily. ROKU's been kind of in this downtrending channel. Had an explosive day up, has earnings today after the close. So this week, they're having some drives in price, setting it up for its earnings. We don't know how they're going to report yet. But we had this big explosive day. We'll see a trade from that day. And then a second day, gap and go. Here's the hourly chart and how that's set up. Big explosive day from the bottom of the channel, breaks out from the channel, gap and go, another really strong day. So the first one we're going to do is a trend follow scalp. I wanted to start out with this one because I feel like this is kind of easier for traders when they're first starting out. A lot of the trades I make in scalps are really quick momentum drives in the morning, and oftentimes as a new trader, you can hit in really quick and get spooked by how quick the tape is moving and not really be calm and let the trade work out for you. So this is going to be a nice example of, I put a bid in, I was trading against the 55 EMA, I like to use that as my confidence level. Put my bid in, it tags the 55 EMA, drives away from price, and I take it to new highs. All right, so quick pause here just to go over some things that people watching might not really understand. I talked about my color gradient in the last video. So obviously bid, ask, have it layered down in colors. I like the brightest to be the current bid and ask. Time and sales, anything done on the bid is going to be in red. Anything done on the offer is going to be in green. Anything between is going to be pink. And obviously my chart here just has VWAP on it. I don't have the EMAs on this chart. I'll kind of talk you through where they are. I use Thinkorswim. They're on a different screen. So right away at this point, the 55 EMA is at 132.06. So I'm throwing a bid in, looking to get filled around that area. Once I get filled there, my stop is essentially if 132 drops in any type of way, if I get a close underneath that 55 EMA, I'm going to get out. But at this point, put my bid in. If I get filled, I get filled. And then I'll look to try and see how it develops, look to see if I can take this to new highs. So I got filled for 2 tiers right there. This isn't going to be a really quick moving tape right away. It's later in the day, it's about 1:30. See, it's not doing a ton of volume. It just kind of tagged that area. They're not really hitting the bids. There's not really any selling. It's kind of just hanging out.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So right away you see a little bit of movement away in price. Back up 132.20. Now I'm 20, 30 cents in the money. Now I'm looking to get an idea in my head. If this happens quickly and we get a big extension up from the 55, maybe dish a little bit out, see if it can hold the 9 and the 21, and then start to get a little bit more sophisticated with how I'm managing my position, with the overall idea that I think this is going to go to 133 minimum. So I'm layering some offers up, taking some tiers out. Again, I'm going to hold a smaller core. I just got 40, 50 cents. Dishing some out, generating cash flow around the 9 and 21 EMA. If it pulls back in, I'll put some more size back on. And then keep in mind that I'm playing to at least take my core of 1 tier up to 133. So nice little reaction there, 50 cents, a little bit of size, not really anything I'm too interested in. It's not like it's been really developed that hard as a technical level yet. I'm more interested in the highs, 75 cents perhaps. So I'm back down to just a core. So at this point, it's spending a little bit of time here. You can see a lot of prints start coming in. Now it's skipping above 50 cents. It's into the 60s. The high of the day is 77 cents. So now in my head, I'm hitting quickly here. I added another tier. We're breaking above the high that we just made before we pulled into the 55. I'm up to 2 tiers again. Looking to see what happens at 133. Already you can see the volume coming in here is very nice. Highest volume we've seen since the previous drive up. I have in my head, this is definitely going to probably extend this move a little bit. We're making high of day. So now just for my own sake, this is getting a little bit of an extended candle now. I'll dish some out ahead of 133, see if we can break. So oftentimes what you'll see happen is you'll see a stock come up to a whole number. There'll be a ton of size on the offer there, and it'll need to retrace. Sometimes it could be like a 50, 60 cent retracement. Maybe it retraces this whole move and fails. But considering we tagged 90 cents, then pulled in a little bit, let the buyers reload in the low 80s. I took those offers out ahead of 90 cents. Now I'm thinking that we're going to break. Was kind of overthinking it, what are the odds we make a 13 cent new high or 23 cent new high and fail from 133, market strong? Just doesn't really make any sense. So instead I actually added another lot for momentum. As soon as I can kind of tell that they're about to break it, so you can see it's stalling at 90 cents. A lot of green prints coming in, no red prints on the side there, 96 cents. I add another lot. You can see the size at 133, but given the context of the move, I'm not really thinking that 133 is going to hold. Maybe it has like a 10-cent pull-in, 15-cent pull-in. I'm not trying to overthink it too much. I'm essentially long from quite a bit away. This is what you call being in the driver's seat. When stock's trending nicely and things are going well, there's not really too much to think about here. I have a momentum lot on. I'm not kicking the momentum lot on unless the high of day drops. If this gets back underneath 70 cents. Just looks like buyers need to reload real quick. So a little bit of a pull back to underneath 80, rebids instantly. Still not trying to overthink this too much. Making sure this 70-cent area is holding. Bidding it back up. You can see there's no volume on any of these pull-ins. So I'm still not trying to overthink it too hard. Now we're back up into this 90-cent area. I want to see some good bids. I want to see the tape speed up, see it flurry into this move, and see if we can get a nice break above 133.
Did you add there again?
No, I'm still holding. I'm up to the maximum amount of tiers that I want to be in for this trade at this point. So I'm putting some offers up above 133. Sometimes you flurry above the whole number and then they trace it back down. Considering I'm scalping at this point, I want to be pretty quick. Another quick note to mention while we wait for this to break. See a lot of guys scalping on 2 or 3 minute time frames. That's possible too. It needs to be around a technical level. So we get the nice break through 133. If you think about it, I've only been in this trade for 10 minutes. That is still a scalp. I'm not holding this all day. My average trade here is probably going to be less than 15 minutes. So I think I layer some offers up here. Get taken for 2 tiers there on the spike up to 133.20. Layered them out all the way up through the thrust. Now I'm looking to see if we get another drive forward. Took out a half a tier up there. Now I just have a half a tier trailer on. Sometimes you walk into, a little bit better of a trade than you expected for the scalp. For me, I like to leave on maybe a quarter or like a sixth of my size. Basically what ends up being like half a tier, depending on how big I got. And just let that go, especially if the trend's moving really nicely. And then just put a stop underneath the 55 EMA and go and do other things. Any questions about this one before I move on? Cool. Yeah, these examples are going to be super self-explanatory. You want to buy bit, you want to set your bids in, be really diligent about your prices. Now this next one's going to be, a great example of what I like to call dip and rip. So we've gone over this so many times in the morning meetings. I'm looking for a stock that has a relatively tight pre-market range. It just so happens to be the next day in ROKU. So think about it the day before, very strong stock, gapped up, any type of kind of spooky move in the early morning to get anybody bought in the pre-market out. As soon as that gets back into this pre-market range, breaks the pre-market high, I'm going to hit in for momentum. So essentially what ends up happening is see it dip, gets back up, breaks into this area, I hit in 1 lot, then I hit in 2 lots, and I take those lots up into for a nice quick momentum move. And then again, I just leave on a trailer that ends up trending nicely for me later on. So this one will be a little quicker. Keep everyone on their toes. So right away, ROKU's already done the dip. It's gotten back above 136. And right away, I'm seeing it come in. The pre-market high is 136.50. I'm already in before then, giving it kind of a second here. It's really fast. As soon as it breaks above 136.50, you know, this trade's working and I'm in the money. I don't really have to worry about anything. Breaks 50 cents, you know, not really any size there. Already 60, 70 cents in the money. So at this point, I'm in the driver's seat, you know. Puts in that quick initial high at 137.30. Not really thinking too hard about it. You know, maybe I'll take a tier off ahead of there just to kind of lock some in, then let a full tier kind of trend a little bit further. You know, this is happening in less than, you know, a minute. Very quick trade. That's how these will set up on the open. So I'm still in my 2 tiers. It's coming up towards 138. You know, when I move this quick, like to dish some out around a whole number. So I'm putting some offers up. So get filled on some up there. Still holding a tier, seeing if it can break that 137.70. Seeing some size come in at the 50-cent area. You know, not really thinking too hard about that. It's so easy to think you see things on the tape. But when you have momentum like that, like this thing just went, what, $1.50 above the pre-market high instantly. You could see that candle right there is, what, 2 points. So there's a lot of wind at my back here. I'm not really too worried about, you know, where my stop is or where do I have a trailer on, like do I leave some on. I'm just letting the trade work, sitting back, riding the momentum until it stops. So at this point, I'm down to 1 tier. I got some out ahead of 138. Layering some offers up for another half tier. Nice little thrust up here. You know, again, I'm putting an offer out ahead of 139. Really nice drive there.
May I ask you?
Yeah, sure.
What should happen now in time and sales if you should start thinking of the whole position?
So what are you asking, what do I need to see in the time and sales that would get me to hold everything I have? I'm not really going to go off the time and sales anymore. The time and sales is what I'm looking to see on the original break of the technical level. The time and sales are a lot more important later on in the day if I'm looking to see new momentum come in. So for that first example, I'm putting bids in, you know, I'm looking for there to be a kind of curl and a drive away in price. That's when I want to see the time and sales speed up, see how much green there is. There's only 1, 2, 3, 4, 5 red prints there. Like that's what I want to see in that example. But for this example, considering the price is what's guiding me and the speed of the tape, you could see how the bids and the offers are just scooting up really fast. It's not staying anywhere for too long. At that point, it's probably going to be kind of impossible to read the time and sales. You know, if we went back really quickly, you know, and you look at the time and sales here, like you know, I'm seeing a lot of green, but I can't see what prices those are at. You know, I'm also watching the tape. You know, I just know, you know, out of my peripheral vision that there's a lot of green getting printed, and I'm not too worried about this move slowing down. And I also have a feel for the stock. I have a pretty good idea that there's going to be strong momentum here. You know, the tape is skipping prices all over the place. The spread's always tightening up towards the offers. So, you know, I'm not really too worried about what the time and sales is doing. And I have a plan. So my plan is like around every whole number, I'll take a half tier off. I know the ATR of the stock. I know what to expect in this type of a move. You know, it's ripping up into, I think there's not really resistance at this time until maybe like 142. So I have in the back of my head a price target that I want to at least bring my trailer to. But as far as scalping goes, for momentum, as soon as I see the tape start to slow down around any type of offers or something like that, I have to be out. Because in this particular instance, you know, if you look at this stock here, this stock could pull all the way down to 136.50 and then bounce. But that's going to be a new trade for me. I want to be out of most of my size up there, so if it pulls back into 136.50, I can put on a new trade with a new stop, targeting a much higher price later on. But considering this happened, these are 2-minute candles. Actually, this is 1-minute candles. 1, 2, 3, 4, 5. It's been 5 minutes, and I've already gotten, you know, almost 5 points out of the trade. You know, I'm good on that. You know, I don't really need to be a hero here. there's other things moving, you know, I have an entire rest of the day left, I'm okay with taking my chops there and maybe letting it set up.
So you're watching basically the time in cells and tape when it's breaking.
Right, exactly.
Once you are in the trade, you're just riding by price action.
Yep, going by my plan, putting out offers where I expect the price to go to, and then, you know, not overthinking too much of what's happening on the tape at that point.
Well, thanks.
Yeah. So, you know, that's essentially the end of this trade. I get back down to a trailer lot, like you saw in the chart. It spends a lot of time hanging out up here. You know, I ended up building into another position here. You know, I started position trading off of the feeler. So, you know, you always got to have two different plans. My scalping plan is for momentum. I'm going to take big size. I'm going to be out of it quick. And then depending on whether or not it holds up, maybe it flags, maybe it makes some type of wedge up here, then I could start a new trade, put on more size, have tighter risk, and it's not so much of a I need to react quickly. Okay, so the last trade is going to be kind of a similar idea in that I'm looking for momentum early. But what happens here is Baba had, you know, this is the hourly on Baba, was kind of pulling in a little bit on the hourly and then was gapping up after, you know, closing in the middle of its range the previous day. Comes up in the morning, it was kind of opening towards the top of its pre-market range. Big selling comes in early, you know, big volume, pukes it all the way down to the bottom of the pre-market range, spikes up a little bit, makes some marginal new low, and then starts to really tighten up here under VWAP. So this is a pattern I like for a potential squeeze play. You know, on higher time frames, I was expecting Baba to kind of have a stronger move. You know, if we really dived into it, what was it selling off on? The market wasn't really necessarily weak. You know, I'm thinking that anyone who's looking to short the bounce, they think it's going to trend down today. They think it's really going to have a super weak day. Opening drive lower, you know, fail from VWAP. Now it's pressing against VWAP. Oh, these are such great prices for me to get short. You can kind of see the volume just really die off as it doesn't hold this new low. First warning sign if you're trying to trade this short, you know, they couldn't push it down with more volume. They couldn't hold it down, and it instantly is retracing back up here. So in my head, I'm thinking, all right, as it wedges, you can kind of see this nice trend line it puts in. It tightens and tightens and tightens and tightens. If it breaks up above this level, I think it ends up being like 40 or 50 cents on the whole number. When that breaks through, that's going to be my trade to get in. I'm going to look to see if it has a strong driving price. I'm going to look to kind of take my size, let it sit in, and see if there's any type of big driving price. So you can see what ends up happening is, takes it out, small little retest, no volume on the down move, and then it rips all the way up to 220.
Question, if you can go back real quick.
Yeah.
Like, so the first two candles, right? Like, it hits basically, no, in the beginning, like right at the open.
Mm-hmm.
Like, so it also hits like the pre-market low, you know?
Yep.
So why would you not go long right there for momentum on the third candle?
Buying this.
Yeah.
The reason for that, for me, in this particular instance, I don't like when the pre-market range is really wide. So you can kind of see the pre-market range here, I think ends up being like, you know, almost 3 or 4 points. That's kind of too wide for me. I'd like it to be, you know, less than a quarter of an ATR. So if this was like let's say just this was the range and it peaked underneath here and then started to go, that would get me interested in that type of idea. But what you have to think about is this just had a really solid down move, you know, 3.5 points in a minute. That type of down move is a little bit too much for me to think it's going to reverse the whole thing right away. I'm thinking it's going to need to spend a little bit more time. I might not even be trying to take it to new highs. I might just be thinking, you know, I can get this squeeze above VWAP, maybe it takes out this candle and fails up here somewhere, or maybe it consolidates up here after it bounces. But it's a little bit of a different trade just because the selling pressure early is a lot more aggressive than what you saw in ROKU. ROKU kind of dipped down a little bit and then instantly got back up, sat there for a second and just ripped. You know, way less of a down move, no volume to the downside. This is a completely different situation. It ran the entire pre-market range in 1 minute, and the pre-market range itself was almost an ATR. So that kind of has to get you prepared for, it might need a little bit more time. So you can see Baba has this down move, you know, dips all the way down, you know, big move there, takes out the entire pre-market range, pre-market range is relatively wide. It looks like there was some buying. Swipes the whole thing, but never really shows severe weakness. So in that instance, I'm looking to buy this break, and I'm really targeting just for it to, quick scalp up to here. And because I have a smaller target range and a tighter stop, I'm going to get bigger in this particular trade, than I did in ROKU, where I don't really have time to see where exactly my price is. I'm just paying up for it because there's so much wind at my back that I'm going to be 1, 2, 3 points in the money right away. And if I have enough size where maybe I lose a point if I'm wrong, if it collapses, if I lose a point, I can get out quickly. It's not going to damage my day too much. And if I'm right, risk a point to make 5. That's why we're in the business. That's what you're looking for. Okay, so for this BABA trade, you kind of see that, this 40-cent, high 40-cent area, we like to call any type of like sticky offers, we like to call that being heavy on the tape. That means that every time the price moves up to that area on the offer, they just hit it back down. You can't really get the price to go above. You get a quick 30-cent down move back to the low 218s. You can tell that they're pushing this down. They're not letting this thing get above 218.50. Again, gets to the mid 40s, wicks back down 20 cents. So right away I'm starting to think, okay, picture a balloon underwater. If you take a balloon, you hold it underwater, as soon as you let go, it flies right through. So anytime you have a lot of upward pressure, stocks really work the same way. Anytime the selling pressure keeps selling, but the buyers are holding it. Eventually you get this equilibrium. As soon as one side gives up, you're going to get an explosion in price to either direction. So in this instance, given the fact that it never really, took out the pre-market low in any meaningful way, not really seeing any volume continuing to the downside, I'm thinking that, this might be that type of situation. So obviously, if I'm thinking that it's going to break 218.50, I want to try and get in, towards 218, be a little bit anticipatory. I have a general feel for how Bob is going to trade. I want to be in from the bottom of this wedge. That way I have a little bit more room to add another lot above 218.50, keep my prices going correctly. I don't want to be the guy buying the top of the range, then it wicks back down and I have to hit out. That's like you're losing the spread. So I'm trying to be patient with the way that I'm doing it. Really trying to make it so I'm in a great position if it breaks above 218.50 and doesn't really explode away from price. Considering, we still have all of this downside momentum that started a day, I'm not expecting this to break and instantly be above 219. Maybe it gets back up, consolidates, has a little bit of a pull-in back to this 50-cent area, and then goes. So I'm in like 2 tiers at this point. Oops. Being anticipatory. You can see it's sitting at 50 cent evenly. We're really tightening up here. At this point, if it breaks 50 cents, this trade is now really in play. Got great prices. I'm already in the money. I can hit another lot. So I'm preparing myself to hit another one. Still kind of holding it. Right there, you can see they gave up 50 cents and let it go 51, 52, 53. Now I'm thinking, all right, that offer at 50 cents isn't sticky anymore. There's not a real seller there. Next time this goes through, it's probably going to skip 15 cents right away. Boom. Right away, we're in the 60s. I added another lot through there. So at this point, not really seeing the volume I wanted to see to take any out or think that I'm going to get a big trade. So right away, it dishes back underneath 50 cents. No volume yet, so I'm not really too worried. If I had hit that lot above 50 cents, which I did, and that was my only trade, I probably would have puked this right away and not been in. But since I established a core from a little bit lower, all I did was just take out that momentum lot, but I'm still in the original trade. Really on that break of 50 cents, I wanted to see it get to 219 quickly. And since it didn't do that, I got back down to 2 tiers instead of 3 tiers. So now I'm in a decent position still. At this point, don't need to overthink it too hard. Gets back above that area. Take a little bit off ahead of the whole number. Get a nice move to 219. Breaks through 219. Not really any size there. But you can see it's kind of struggling to really expand, and you're not seeing any big volume come in. So at that point, I want to be diligent, trim all the way back down to 1 tier, and if it pulls back into 218.40, 218.50, get all the way back up to 3 tiers. If it drops this 25, 30 cent area, I'm out of the trade. Maybe this is just an opportunity to re-short. So it's acting nicely. Has a really shallow pull-in. They can't even get this back to 50 cents. As soon as you see it rebid back above 219, I put a momentum lot on. So now I'm back up to 2 tiers. Didn't have an ability to get back to 3 tiers because it didn't go all the way back down here. Really shallow pull-in. Oops. General rule of thumb, if you have a break in price and they're not really showing the expansive candle yet and has a little bit of down move that retraces instantly, you're probably about to see that balloon underwater effect. Happened a little later, but at this point I'm already $1 plus in the money. So that momentum lot is kind of like a freebie. Definitely thinking it's going to break this area. Thinking in my head it's probably going to go to 220. Try to get at least a tier and a half up there. I think I'd dish out a tier or half a tier somewhere around this 50 cent area. Some nice candle to the upside. Took off half a tier. Now I'm in a tier and a half. See what it does at 220. Big failure happened there. Thinking it might need to consolidate ahead of it. If it spikes up there right on this candle, big size on the offer, I'll probably get all the way back down to a half tier. So you can see we're coming up to it. Decent size there. Never really gets up there yet. Kind of seeing how it does. Right at 220, see all these green prints coming in and they can't even get it to 220.01. So right away I'm thinking, okay, maybe it's actually, there's legit sellers here. They actually might be able to hold this down. See still big green prints coming in. Can't get above, can't get above. Really holding it. This would have been a great round number scalp this time. It's the one example I've seen where it works in recent times.
It worked today.
Yeah, it did. It did, that's right, yeah. I got smoked in that, it sucked.
It works in Baba.
Baba, yeah, so I will say that. Baba likes to be a sticky stock. It likes to go to these whole numbers, especially big psych levels, the quarters, 225, 220, 210, 200. It likes to, have these crazy like 40, 50 cent rejections from those areas. So I know that ahead of time. So as soon as I see it fail right here, all the way back down to half a tier, if we go and look at the chart, stalls it there, and then we get a big 50 cent pull in. They try and spike it back up and it just gets smoked again. So I actually got out of that last half a tier that I left on to see if it would break once this candle kind of broke down from 219.50. Out of the position, maybe it needs some time, maybe it needs to consolidate somewhere. It becomes a different trade, it's no longer the scalp. As soon as you see a slowing momentum, against the direction you're in the trade, you don't have to overstay, you don't have to be a hero who buys this, buy into VWAP, try and get bigger, the trade has changed. You have to have your plan, stick to your plan. And that's a great example of what can go wrong if you don't do that. All right, those were all 3 examples. Any other questions?
When you see it's going to fail, how are you hitting out? One of those midpoint orders, you just hitting bids,
Yeah, I'm just gonna hit the bids. Yeah, especially in a stock like Baba where if it's not having a big momentum driving price, you're probably only going to have like a 2, 3, 4 cent spread. Not too worried about taking that. Just trying to get out. Just a scalp. I already made 1.5 on the trade. I'm good.
Now it's your turn. Do you use a scalping strategy in your trading? If so, please share the type of scalp trades that you make. Let us know by leaving a comment below right now.